If a real estate agent in California asks you to sign a buyer agreement, do not just sign whatever they put in front of you. I've been doing this for 22 years, and I've watched buyers get locked into terms that cost them thousands, usually because nobody explained what they were actually signing. In this video, I'll show you exactly what to watch for, the two situations you might be in, the one number you should almost never go above, and two clauses that quietly cost buyers the most. Since 2024, California requires a written agreement before an agent can represent you as a buyer. It's called the Buyer Representation and Broker Compensation Agreement, or BRBC. It's not automatically a bad thing. It exists to make how your agent gets paid clear and upfront, in writing, instead of buried somewhere at closing. But it is a contract, and like any contract, the terms are negotiable, even when someone tells you they're not. Here's the first situation. Say you're doing your own searching, scrolling the apps, finding the homes yourself, and you really just need an agent to write and submit the offer. If that's you, you have a lot of leverage. And here's how I'd protect yourself. First, sign the agreement specific to a single property, not a blanket agreement covering every home you might ever buy. California's forms actually allow this. Second, keep it non-exclusive. Here's why that word matters. An exclusive agreement can mean that even if you find the home yourself or use another agent, you still owe your original agent their fee. Non-exclusive keeps you free. And third, use a flat fee option so you know your exact cost up front, and you're not on the hook for a percentage of the whole purchase. That way you get the help you actually need. The offer, the contract, the transaction, without signing away far more than the service is worth. Now the second situation. Maybe you want more hand-holding. An agent actively finding homes, touring with you, guiding the whole search. That's a real service, and it's fair to pay for it. But even here, protect yourself. California law caps these agreements at 3 months, 90 days. That's the maximum term, and it exists specifically so you're not trapped with someone who stops returning your calls. Sign for the minimum the situation requires, not the maximum. And here's the big one, the compensation number. I've seen buyers sign agreements at 3%. With the agent saying, don't worry, it's negotiable, it's usually covered by the seller. Then the seller offers 2%, and suddenly that buyer's out of pocket for the difference. Let me put a real number on that. On an $800,000 home, 1% is $8,000. That's $8,000 out of your own bank account at closing, just because you signed for 3% instead of 2%. I'm not saying every agent does this, but I've seen it happen plenty of times. So my honest guidance, be very cautious about going above 2 to 2.5%, and understand that whatever you sign is what you can be held to, regardless of what you were told verbally. Beyond the number itself, there are two clauses most buyers never think to ask about. The first is cancellation. What happens if you want out before the 90 days is up? Don't assume you can just walk away. Ask before you sign for the right to cancel with written notice and get it in the agreement. A fair agent will agree to it. If someone refuses to let you cancel, that tells you something. The second is the protection period, sometimes called the safety clause. This one surprises people the most. It says that if you buy a home the agent showed you, even after the agreement expires, you can still owe them their fee for a set window afterward. So you can't just wait out the 90 days on a house they introduced you to. Read that section carefully and ask how long that window runs. Neither clause is automatically unfair, but you need to know they're there because what you sign is what counts. That's the thread through all of this. What you sign is what counts. Not what the agent says out loud, not don't worry about it, the terms on the page. This is exactly why I work on a flat fee instead of a percentage. You know your cost up front, and anything the seller offers above my fee comes back to you as a closing cost credit, not something you're scrambling to cover at the closing table. So before you sign anything, know which situation you're in, sign specific and short, watch the compensation number, and check those two clauses, cancellation and the protection period. If you want a second set of eyes on a buyer agreement, before you sign it, comment BRBC below or grab my free buyer's guide linked under this video. I'm always happy to tell you what to watch for. I'm Roman Doktorovich, and I'd rather you sign something fair than something you didn't understand.